Hello, everyone. Mike Arnold here, co-founder Path Trading Partners, along with Bob Iacchino. How is everyone doing? Sorry, I'm in the middle of a couple things getting caught up. Bob should be on in a bit. He is actually still on some business stuff. So we will wait for him, but I know you're all here just for me. Thank you for being here, everyone. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back, like the videos, and leave some comments. So, very interesting day. Yes, Davey. The tactile trading at its finest. Hello, Warren. So, is the rally over? Was that it? Was that it? Was that it, Wavy? We got Wavy and Davy. So, let's see. We got to prepare ourselves for tomorrow, though, and then we'll look at the markets today. But tomorrow, let's just glance. We have the big one, PPI. PPI tomorrow, 7:30 Central. 7:30 Central. So, and then we got the crude oil. So keep an eye with that. The double bottom hit the first target. So, but really PPI, that will go off before the morning live stream. So we will be prepared. Are you prepared? Well, if you tune in here, I hope you're better prepared. I hope this does help people prepare. That's why I do this. Because you know it's not for the YouTube money. By the way, tomorrow, before the open, JP Morgan. So you got JP Morgan, Delta, BlackRock, But JP Morgan should be interesting. We'll tune in to see what the airlines think, especially with the shortages in jet fuel. So that will be interesting. Bed Bath & Beyond I always like to look at because that's a potential takeover candidate at some point. Just wanted to put that up there. S&P map, it actually does not look as bad as the price action looked today, though. I mean, Microsoft down a little, Google down a little, Apple up, Tesla up a little. Could not fully fill that gap up, then filled the gap down. So that was very interesting price action. Sort of a distribution day, trying to still find the bottom. Oil, of course, up with the crude rally. FOMC, you see, where are we sit? 87%. So that's roughly in line. We had Brainerd talking today also, reinforcing that they're going to have to start the balance sheet runoff, but they're all just saying the same things, and the market's just, I don't know what the market's doing. Still in negative territory. Remember to amplify upside and downside moves, or you can see the sharp rallies and the sharp declines. Still the flip 45.23. So once Bob comes on, I will bring him on. Until then, we will just go through our normal progression. Yeah, there was some good price action out there today. Theme of the day, short the rip. Was it? No, it wasn't freaking it. I still think I have so many things that pointing for a bounce move. It's ridiculous. Now, what's interesting is another longer term system did tip to a major sell signal. Didn't even have to wait till Friday. So the major sell signals, does that mean I get short tomorrow? No, it means I strategically position a short because that can unfold over the next few months. But I'm just letting you know another major system did. And I'll give you another example because people asked me today, well, are you wrong? Are you wrong? Are you wrong? Was that it for the rally? And no, it's, again, even if I have 5 things pointing to still a short-term bounce, could they all be wrong? Yeah, it's all probabilities. Are they cumulative? No, they're not. So if I have something that says 70%, 72%, 78%, and 83% that all say should rally within the next day or so, does that mean that they could all be incorrect? Yes, because they're not additive. And they could all fall into the probabilities of them being wrong. It does happen, but I have to go with those probabilities. Then that's all I can do, because otherwise it's trying to predict instead of trying to trade. And I'd rather be aligned with probabilities than trading against probabilities. Now, longer term, because I know I'm going to get asked this again, longer term, yes, everything is still macro, very, very bearish. Again, another major system signal today, another bearish long-term sell signal. Again, that's over months. With that, I bring on Bob when he's looking away.
You hit that Bob button. I get surprised by that now.
I hit the Bob button, and Bob's here instantly. He doesn't get any warning. No warning.
No warning at all.
Let me get through a couple more of these comments on what Bob is. They double top on Nasdaq. Let me just take a quick peek at this real quick. This was fantastic price action today. There's a double top in the S&P, double top on the Nasdaq, and I can stick around with this nice upward sloping neckline, head and shoulders on the Dow. Everything hit the targets. Fantastic intraday trading price action. And now, I haven't put them on the other ones, but S&P still a double bottom pattern. We'll have to see if that triggers. But then it could actually return to this little declining long-term trend line. So what are your thoughts, Bob, on today's price action?
I agree.
You agree? You're done?
No, I didn't think today was very revealing. I think as I mentioned this morning when I came on the post CPI live stream, which you call it something else, I think, but was that there was good news in the CPI, enough to kind of roll yields back a little bit. Like this morning, the 10-year dropped from a 279 settlement yesterday to a 272, and it closed at about a 273. So the move kind of held. And that was kind of, I think, expected, because I don't think yields were going to power through 275 and get all the way to 3% on the 10-year, for example. We kept a fairly steep yield curve. And it was kind of a situation where people were now seeing the shift from CPI again, from goods to services. Now, we are a services economy. So that's definitely not a relief for the consumer. Also, when you look at what happened with crude oil today, and really all of the commodities, right? I mean, all day long, basically all commodities for the most part were up. Copper was up over 1.3%. Crude oil was up almost 7% on the day. By the way, there was a jump in volume in copper as well. 3 days of higher volumes. Copper volume was the highest since March 6th. So we saw a volume jump yesterday, and we saw similar volumes today in copper, a little bit less than the jump yesterday, but still similar. And then we saw silver go up, gold go up. All of this stuff is inflationary price action, right? Despite the weaker CPI that we saw, that's all inflationary price action. We saw the same thing in the ags. We saw ags open up higher and pretty much hold a lot of their gains, right? You might have seen a little bit of a pullback, but nothing that I think anybody was comfortable with. It came off the highs. That's about it.
Well,
so all of this was inflationary price action. Go ahead,
corn
Mike.
up $1.54.
Yeah.
154 basis points. Soybeans, which has been lagging a bit, but that'll catch up over the course of the spring. That was up 91 basis points. And wheat, the big one, up 208 basis points, also still triggering this double bottom, which triggered yesterday. I forgot to point that out, but on its way to the next target levels. And look at that, from this little run up, holding the 62.5% harmonic, creating a double. Now the double's triggered. So anybody who's following this stuff, you should have been able to pinpoint this yourself, but there's a really nice continuation, potential long wheat trade in there.
Yeah, so the whole thing we've been talking about on these live streams about things still not being good, even though we were getting this rally in the equities. I mean, I basically still feel the same way about it, right? You're looking at a situation where, yeah, we had a nice rally there, and a lot of people, I think Wavy was one specifically who said this is hard to watch without being involved. And, I totally feel you on that. I totally understand why that's the case, but I didn't have any sort of buy signal that I could be in that made me comfortable. So I would have rather just watch it from years and years. I came in a little bit late, obviously, but I heard Mike talking about things not being additive. If if I would have just jumped into these trades because I just thought, you know what, it's going up, I can feel it in my gut, this and that, it goes completely against the way that I look at the markets overall, right? Fundamentally, even though I don't trade fundamentals, I felt like there was more downside than upside. We obviously that hasn't happened yet. This upside that I missed out on is way more than the downside that is currently in place. But I just feel like we haven't washed out. I really do. I feel like we haven't washed out, and I feel like people don't realize how serious the Fed has to be. We had a conversation probably 3 weeks ago about what success needed to be in inflation. I heard one of the probably most bullish analysts. I'm going to look on my Twitter to remember his name as I'm talking about this, but he was on Bloomberg talking about how things were still good and talking about how consumers were sitting on a bunch of cash. He's at Renaissance Global, I believe. Um, and I reached out to him and said, I don't understand what cash you think consumers are sitting on because we have a declining savings rate right now. It's pretty dramatic, actually. If you guys want, I'll put the chart up, but I sent it to him in my Twitter. I'll probably find it when I stop talking. But essentially, he said we're talking about stockpiles. The data that you get on the savings rate is rolling. Well, but if the savings rate is declining, here it is, Neil Duda of Renaissance Macro. This is the chart of the savings rate, and Mike, I'll send this to you. You can put it up if you want to.
Yeah,
If you see that red line, that shows you the last time the savings rate was where it is now, and that was 2014.
yeah.
Okay,
Text.
so
Yeah,
all
put it up.
yeah, I'm going to send it to you right now. All of the savings rate. Can I send you this tweet, or you need me to send you the image?
It, can you just
The
send me
image?
the image?
I'll send you the image. Yeah. So essentially, the savings rate is where it was in 2014. All of the money that was basically given to people over the past however many months with the pandemic and whatever is gone because that's all back down, right? Mike, I got to send you the tweet because I deleted the picture.
That's fine.
Um, Actually, no, I can go to my deleted images. So Neil Duda says that there's still a massive pile of this money, and just the savings rate has declined as in terms of additive, right? And that may be true. But if the savings rate is declining with people making more money, and they're making a lot more money right now, right? It's just that that's not keeping up with inflation. I still disagree with him that that's something to sort of cheer and think that that money is going to come rushing into equities if we dip. I just disagree, and I don't know how else to say it. So anyway, that's what I think overall. I think that what's going on right now with this little bit of weakness we've seen is the market starting to adjust to data that's going to come out, that's going to start to show weakness in general, and the fact that the Fed is probably not going to pull back from the tightening path that they seem to be set on until the stock market actually reacts. I sent it to you, Mike. So when you see this chart, I basically drew the horizontal red line with the ruler tool, so it's perfectly straight. Okay, I didn't just eye it. Mike, you've seen me draw on line when I'm trying to eye it. It's horrendous. But I used a ruler tool to put this line on here, and I don't think consumers will be piling a bunch of money into the markets, and I don't think that they'll continue to spend. We've already seen consumer spending dip a little bit in the last set of numbers. But this same analyst said he thinks they'll get inflation down to somewhere around 3.5 to 4.5% in late 2023. Is that success?
That's like a year and 9 months.
It's a year and 9 months, and it's double the Fed target. And this will be happening as the unemployment rate is starting to go back up, in my opinion. That's the savings rate now. We have literally fallen off a cliff. So that means people are not adding more money into savings. And if inflation is actually hitting the average person, whatever stockpile Neil was referring to, which I don't doubt his work, that's either already declining or is going to start to decline rapidly.
Well, credit usage is going back up.
Through the roof.
So, and
Through the
normally, if
roof.
people are sitting on a lot of cash, they're not putting stuff on credit.
Right.
Especially with there's very, I mean, I remember like I put a couple purchases last fall on credit because it was 0% APR through
Right.
a firm. And I'm like, well, if you're going to essentially pay me to keep my money and do other things with it for 0%, fine.
Yeah.
But right now, I can't find any kind of offers like that. And now rates are higher for credit, and that people are putting more stuff on credit. So, you know, that's where we stand. So I think people are, and you can't say inflation. I mean, every time is not hitting hard. I mean, every time I go to the store, and I went to Costco a couple days ago, and stuff that I just bought a couple months ago was already like 5 to 10% higher. Stuff that I buy
Yeah.
reoccurring, and I'm like,
Yeah.
what? It was just jacked a couple months ago. Now it's up again.
Mm-hmm.
It's this is not going away, and you got to think also with the housing numbers, that's not even baked into inflation properly.
Right. Right. Not at all. And by the way, mortgage applications are down 40% last month. So now I have a friend I know personally, loves his house, didn't want to sell it. It doubled in a year. So he took $200,000 out to put it in his checking account. And now mortgage rates are down 40%. Mortgage
Mortgage
applications.
applications.
Sorry, applications. So now he put that in. He said he needed that to pay his taxes and for spending money if he needed it because he's worried about losing his job. Dude, don't ask me. I don't
Well,
even want to know.
I
Put up that Twitter profile, would you? And I could talk to Wavy about the podcast real quick. I
put
sent
up.
you a Twitter profile. I just texted it to you.
Hold on. You expect me to run the show? Go to get all this stuff coming in. So you want me to put up this Twitter profile?
Yeah, just put up that Twitter
I wonder
profile.
why.
Wait. So Cameron Dawson, Wavy put in. I'm a fan of the new podcast. Looking forward to more episodes. If you guys haven't seen it, it's on the Path Trading Partners YouTube channel. Last week we had Kamal Shri Kumar, who Mike is aware of, talking about rates. Great conversation with him and Jim. And then me and Jim put trades out. My trade was to buy gold, which is doing really well. Um, I bought gold in 1945 on the futures, and it's 19. What is it today? 1969.70. So anyway, Cameron Dawson is our guest next week. And the reason I asked Mike to put this profile up is she is just starting to explode in popularity. She's only still at about 26,000 Twitter followers. So if you guys want, follow her and tell her that you're looking forward to hearing her on our podcast. It's called Futures Edge Podcast. She's excited to be on, but she's also friggin' brilliant. About a month ago, she put out a 35-page report. Mike, if you want to see it, I have it. Talking about how we have not had a washout in equities yet. And she said that even if we have a little bit of a rally, we'll put her at neutral, waiting for this big washout. And she has several indicators, all technical, as to why we haven't had an equity washout yet. And she was the one who created, remember that chart, Mike, where it was the 2000 crash with all the rallies in it?
Mm-hmm.
She's who I stole that chart from. It's from Cameron. So she's going to be our next guest Friday. That'll be out a week from today, up on the website or up on the Path Trading Partners YouTube channel. I'm working on getting it on Apple Podcasts as well. But she's going to be a really, really fun one to listen to. But check out the one with Shri because him and Jimmy were just roasting the Fed. Shri's a super polite guy. And Jimmy kept going, come on, Shri, call them nitwits. Call them dimwits. And Shri wouldn't do it because he's a super nice guy. But he was railing against the Fed and how long they've taken to raise rates. And Shri has been right on interest rates for 4 years compared to everybody else who wasn't. Anyway.
All right. There you have it.
I agree with you, Sterling.
Let's see what Sterling. You just can't say that until I put up the comment.
I'm sorry, Mike.
How are people going to know what you're talking about? The reports are showing used car prices are down, but we're not seeing it here. Some Toyota dealers are selling new cars for $20,000 over MSRP. We're having to put more than original MSRP in trades.
All
Yeah,
right, I'm
I
about
mean,
to send you one more chart, Mike.
yeah, and I
As we're
mean,
talking,
what the used car price is supposedly down like 3%.
almost 4%. It was like 3.7%.
I mean, after the huge run up, that's like a pause. That's like what we
Yeah, it's
say a horizontal correction of a slight pullback.
That's the thing, and it's part of the reason, Sterling, why the core inflation month over month was missed expectations by 2/10 was because of the used car prices. Now, I'm not seeing it here in Florida either. I'm sure Mike's not seeing it in Chicago. But don't what's the word I'm looking for? Don't conflagrate. I don't think that's a word. Don't mix used and new car prices like that because used car prices are down. And when people go in and see that the new car prices are still selling over MSRP, they'll snatch up whatever used car prices have come right back into the fair range. If used car prices are down by 3.7%, whatever it was, they're still overpriced by about 10%. Here's the semiconductor wait times. It's not going down. So that means new cars are going to stay elevated. And like Mike just said, the used car drop is a pause because look at the new car, look at the semiconductors. This is not coming back quickly. The supply chain, especially in the case of semiconductors, is not coming back quickly. This is from Susquehanna. Their research is legit. And this is their March. I think it's the March figure right there that you're seeing in red.
Yep.
It might be February, but it's not last year. It's this
No,
year.
it's March.
Looks like March, right?
Yep. Uh, yeah, and around here because we have a car coming off lease, and I was trying to find something, and there's dealers I've been talking to. They're like, I'm like, can I order something for October? They're like, no.
Yeah.
I'm like,
No.
will you take my order? They're like, no.
Yeah.
We can't even take an order yet because we don't honestly know when you'd get delivery. So
Mm-hmm.
we're not even going to bother taking an order. And they're like, we've allocated everything we've allocated. We're probably allocated through the end of the year, even if you did order now. So luckily, I can just buy out my lease,
Yeah.
and that which is fine. Uh, but it's not easing up.
No, it's
Let's
not.
let's see. Countrywide, 12% of homes for sale had a price drop during their 4 weeks ending April 3rd, up from 9% a year earlier, in the highest share since early December. And
That's
I'm
good
not
data.
seeing price home drops yet around here. Literally, there's stuff that's still. I'm like, there was one because I'm watching because I might be putting up my place, and
Yeah.
there were in my neighborhood, literally two homes came on under $1 million, and that was it. And they were both gone in 2 days. And they were up. One was bought under 2 years ago for 750,000. Just went for $1 million under contract in 2 days. So up 250,000. It's still because there's such
Mike,
low inventory. So in higher
where
inventory
I'm
years,
at, they've doubled in less than 2 years. They've doubled. It's
well,
insanity.
there's place when my wife Julie was out in Arizona, next door to her parents' house. Place sold 2 years ago for 600K. No updates. Just sold 1.6 million.
Wow.
I mean that's
Gilbert Gottfried's dead, just so you guys know.
so.
Hey,
What are
Sterling, who does your high mileage warranty stuff?
you're looking for approximately 2 more years? Fantastic.
I've got a stake in a high mileage warranty reinsurer, Sterling, so we should talk.
I don't even want to know. Oh, and here we
Tire
go.
and wheel, high mileage stuff. I'm in.
Must suit over delay in disclosing Twitter holdings.
Is that true?
I think I saw it. It's going to get very interesting with him filing the wrong form. And did you see that all the stuff he was actually listed?
He's always filed incorrectly.
Yeah, well, Did you also see up on the Twitter website, which has since been taken down, but it was up on at the evening of March 31st? He was already listed on the board of directors a full 4 days before it was even disclosed that he had this stake in it. So there's going to be some interesting stuff coming out. Very interesting stuff. There's
Uh,
always stuff surrounding him. It's
yeah,
like
there is.
he's the entertainment market gift that keeps on giving.
Yeah.
Uh
Oh crap! I'll be right back.
okay, well, let's see.
No,
Chip
you're
Mango's
good. Keep
looking
talking.
horrendous on daily, weekly, and video and AMD, by the way. Uh Taiwan Semiconductor. What is it? I forgot what the it's TSN, right? I just forgot. Shoot. Why do I blank out? Taiwan.
All
There it
right,
is.
I'm here.
TSM. There it is. Sorry about that. TSM, remember, we have this massive long term sell signal. It would be interesting to see if this just keeps going down or we get another slight pop. But this, again, expecting longer term sell signals on this. Still watching for that bounce, though, in NVIDIA. Again, short term bounce. Uh, although we're down in quadruple bottom pattern, so it will be interesting to see if that breaks. And let's check in on AMD. Again, stuff's getting so oversold, but these bounces, AMD just hit the next harmonic, so I'll be watching for a potential little bounce play in AMD with a gap fill, but that would just be for another short term bounce. Let's see what else. What else do you want to touch on, Bob?
That's really all I wanted to touch on. And the crude oil. The last thing about the crude oil thing is there's some analysts that think. Oh, and copper thing too. But there's some analysts that think that China's demand is coming back a lot quicker than people think. That it'll just be like almost an overnight thing when their demand for crude oil comes back. I don't know if that's necessarily the case, but rig counts are actually starting to make reasonable jumps here in the U.S. So that's another interesting thing. So I still think I'm surprised to see it above 100, but I'm not short it. I'm not long it. I don't know how long this will last. It's a good chart, but I don't have a position either way. And then copper, Goldman Sachs bumped up for their price target for 3, 6 months, and 12 months. And they're expecting new all time highs within the next 3 months. And that's based off of March. There was actually a decrease in copper stockpiles. And that's the first time in 10 years we've had a decrease in copper stockpiles in the month of March. That's prime restocking season for copper globally. So that stuff's getting used up pretty quickly.
Uh, William actually has a question for you. What are your thoughts on Boeing? I feel like everyone and their mom and ex girlfriend want to travel this year.
Well, fundamentally, I mean, if you're talking about people wanting to travel, I think you more want to look at like Southwest than Boeing.
You're
Um,
looking at airlines more than the
yeah, and
flyer of planes.
maybe even Royal Caribbean or something like that. Um, I don't think you'd look at plane construction as the way to play that, but I would just refer back to the chart because again, that's the Boeing chart doesn't look so great, and I think if your fundamental thesis is that people are going to travel, you could also look at things like Expedia. Um, Southwest would probably be my favorite airline just because they operate so cash rich. But I haven't looked at the chart for either one of those. You could also look at some hotel chains, but I wouldn't be looking at Boeing based on travel.
And Boeing does an ugly chart, especially. I'm still expecting it to retest, even on rallies, to retest these recent lows. Sterling asks, what's your take on Shanghai lockdowns? I don't believe it's about a few thousand COVID cases. I don't have a theory. Do you?
Say that again. I just looked at something else really quick.
The Shanghai lockdowns. He doesn't believe there. It's about a few thousand COVID cases. I don't have a theory. Do you?
I looked at. China COVID cases today, and they were still rising. I don't know if that's still in my history, but I don't know specifically about Shanghai. I have no idea. And, if I were looking at data out of China, I mean, I had a friend that worked at China Construction Bank for about 5 years in New York. And anytime Chinese data came out, he just kind of rolled his eyes. So, no, I don't really have a theory.
Genomic stock, U.S. Steel. You actually have a long-term double still in play that's not confirmed yet, and you have a short-term little double triggered, but let's see, uh, confirmed but not triggered on a longer-term basis yet. I'm still going to be watching if we get that market rally for this to potentially pull back, and then that's a reload play long term into the weekly, but it has not confirmed yet or triggered yet, so it's still just a potentiality. So right now, the short-term play is possibly to the little upside, and then, but that would make it a triple top. So this could get interesting. It's sort of in no man's land right now.
Hey, I'm going to jump off here and let you cover Boeing and some of the other stocks these guys want the charts covered on, Mike. I just want to point out we got earnings starting tomorrow with JP
Yep,
Morgan and
JP,
BlackRock
we
and the
are
like.
BlackRock, my favorite company ever.
Yeah, so keep an eye on that. We talked about this last week. It's going to be about guidance and what they say rather than them beating or missing on top line and on EPS. So remember that. They're likely going to be guiding down, even if they don't believe it or not. So watch not just the guidance, but the stock's reaction to it.
Yep, that's what we will do. So until what's today? Tuesday until Thursday,
Yep.
unless something big happens with PPI tomorrow.
Yep. If it's big
Anyone?
on PPI, I'll hop on in the morning.
Yeah, I'll be on it. We'll be on at 8. So covering PPIs.
Actually, no, I won't. I won't because I've got a 9:15 call that's pretty important. But otherwise, I'll if there's something big on PPI, I'll come on tomorrow afternoon.
Okay. All right.
All right.
All
All
right.
right. Cheers, guys.
There we go. So let's get through some of the. Take a look at the markets. S&P. S&P still now we have this larger double bottom that I am keeping an eye on. Also, we had the reversal from the highs intraday, which were up here with this double top. This didn't invalidate it. Confirmed, then officially triggered, retest the breakdown zone, which is what I absolutely love, and then the sell off coming back down. I actually, just based off of price action, watching it this afternoon, pushing it below this morning's lows. And then this quick snapback was actually, it looked like a stop run play uh, for another bounce back up. But to really, I'm just going to have to play the overnight price action tonight and see if we try to base. And then if we do break down, let me get to update them with this afternoon. So if we do break down tomorrow, 43, 43, 50, 43, 11, which would be which would be below this key support level right here, which we're still closing above. So then you'd be into the next clear path area with a target after 43.11 of 42.76. What's interesting about that on the most recent run up here, this next target, this next harmonic is virtually at the 62.5. So if we're to close there, then it would statistically favor lower prices again. To the upside, again, I really don't have a lot based off the 4 hour. This is an advanced clear path move. You see clear path up, clear path down. So trading back into this and based off negative gamma could still accelerate to the upside. And if you do break the lows with momentum, we'll accelerate to the downside. That's just where we're at. Other than that, I'll just be watching short-term price action overnight. If I had to choose targets, I'd still go back to about 44.08. Then upwards to about 44.40. That was this little peak and some chop, about 44.35 to 44.40. But then let's see if this now, even if we rally back and then do trigger this double either tomorrow or Thursday, as long as it's still valid, that would only take us back with a potential target of 45.44. And that I'd really be focused on the second target because that's even below the 62.5% retracement. So could it just bounce up and then roll over again? Yes, it could. We will see what happens with that. NASDAQ also double top here. Confirmed this did not invalidate it. Trigger on the close, retest the level, and then just on the way down. There is a larger still potential double bottom here above 14 to 84.25. And that wouldn't even retrace if it hit all three targets to 62.5 of this sell-off. So that could just be, again, the short-term bounce pattern and then the rollover. As I said, more another major long-term signal triggered for a long-term sell. Dow, I just wanted to review this. This is a proper head and shoulders. This is what proper shoulders form. Shoulder, head, shoulder. This has a proper separation from them. This happens to have an upsloping neckline, which is good. Let me show you how to draw this. Again, I'm going to delete this just so I know some people want to learn this. So you go from the head. Again, if you're new here, head to the neckline right here. And then we do it from where it broke, and I have to make sure I change it's the same targets as the double, which is the 50%, the 75%, and the 100%. 50% stop reduction, 75% first profit target and or stop reduction. Next final one is there. Can it continue lower? Yes, but those are the proper targets, and this is a reversal pattern, so it has to reverse the move. Then you got the little flush out move just by a couple points in the Dow. And then the strong rally back. Again, I think this was a stop hunt in the afternoon being that low. So just wanted to point that out. Longer term, this would not be a valid double bottom in the Dow because this is the move that started it and the price targets would all exceed that move. So would I watch for this key inflection point? Yes. But would I trade it with double targets? No, it is not valid. Instead, if you got up to that inflection point, you would have to trade it with the reverse harmonics to give you the next targets, and this would be my key target area initially with the declining trend line. Shorter term, just have to update these. It eked out a slightly lower low, even though we don't have a great pausing bar, but that just reinforces 33,850, then 33,682 right there. Again, nothing with the Russell. Confirmed this little double bottom and then triggered it, then came back down. That was this. Actually, hold on. Sorry, that was not valid anymore. I forgot it. We rolled down again. So that was not valid. Sorry about the error there. There's just nothing I'm looking at in the Russell right now. I don't like that price action at all. Nothing I'm looking at in DAX. Crude, we still got the double that triggered. So the major area I'm focused on tomorrow is this actually being in front of the first target would be a stop raise at about 102, 101.80 with next target 102.44. 103.71. I'm really focused on this next target. Gold we already looked at with the pop. Retrace right here. 1972 is key support. Silver still caught in consolidation. Could not get enough of a pop out of there. Not really doing much with that. Notes. Going to watch for a little pullback pause and then a resumptive trade higher. We hit all the double targets and just hit the daily rotation zone. So I'm watching for a short-term reaction, then another push higher in the notes. Dollar index, we got the pause and then today rotating back up. So we will keep an eye on that tomorrow. VIX still 25 is my key level on a closing basis. Still did not get the close, pushing up higher and then moving back down. So I'm going to be paying attention to that specifically tomorrow morning. Tesla. Tesla was challenging today. We had the move up above the 62.5 and then stalling out at the 87.5. So it could not get the full gap fill. And then actually, let me show you here. Why was it challenging? Because you had to keep, and I use the harmonics to raise stops, but then you have the up to here, close below right here to 62.5, which favors the gap fill to the downside. Little pausing there, and then pretty much the full, this pretty much was a full gap fill with that little double forming. Other than that, with Tesla, it's just going to depend if it can get the rally on with the NASDAQ that sustains or not. Because this was sold into when the NASDAQ started rolling over. So tomorrow will be below 975 short, above about 1020 long. Let's see what else we have in here. Can we analyze JPM? JP Morgan, the only thing I'm watching, I had this highlighted on my other platform, was this, even with this hitch in there, the potential double. Other than that, it's a short term earnings play. I think they'll beat, but I don't know what their guidance will be. So, and this doesn't qualify for any position yet. And this is before market, so it's going to do it with a gap. So there's really nothing intraday. If you start getting above about 136, it's a short term rally play, and below really breaking down. Come on. Breaking down below about 120, 128. 128 is the only, then I'd be watching for lower prices longer term. So that's where it's just either a breakout or a breakdown play, but it's going in with pre-market earnings. So at this point, it's a gamble to me. I don't have any reliable patterns, so I won't be touching it. If it does break down, 125 and then 123 are your next key targets. What else do we have? Someone bought a 6 million SPY put today. And that could also be a hedge. Keep that in mind when people go heavily into puts. It could just be a portfolio hedge. You don't know. That's where it can be very misleading, especially with puts in this environment, because it can be just a hedge play. Thought the CPI did the expectation the market tanked today. Thought the CPI did the expectation. It did better on the core, and we got the rally, and then we mainly, once Brainerd started talking and everything else, the rally got sold into. Again, it was about the unwind of the balance sheet in June, but this is more of a distribution day still. Rally up. Let me get back to the S&P. Rally up, retrace move, trying to just shake out both sides. And that's why still I'm at cycle bottom, still watching for that rally. Still have probabilities for the rally. It does not shift. This was not the rally. This was not the rally. So does that mean do you just go buy? No. I need at least a trigger, and I don't have a good long trigger yet. That's why I'm going to have to watch the European session. You're stuck in AMD calls and didn't get out this morning. Do you think we're going to have a bounce tomorrow? That's what I will be watching for, but everything tomorrow is based off of, and right now AMD again hitting a harmonic, hitting a significant level right here, which prior resistance becoming support. Cycles all at the bottom, deeply oversold. A lot of chips are oversold, so anything would just be a short-term bounce for me. But again, it's all going to be hinging on Europe price action and tomorrow morning. There is not a great pattern here, though. Besides, we have divergences setting up both on cycles and on RSI. So at this point, if I was holding something for educational purpose only, like that, I was, and again, you shouldn't. I don't like when people say I'm stuck. Whenever you get in a position, you should know where your stop loss is. So if it hasn't hit a stop loss, then you're not stuck. You just have a position moving against you. If it's hit your stop loss and you didn't follow it, then you're stuck, and now you do legitimately have a problem because you didn't follow your trading plan. And if you didn't have a stop loss, you shouldn't be in a position. Would I hold through tomorrow? Yes, easily, because of all the conditions that are potentially set up. Does it have to bounce? No, it does not. That's why you have to know where your stop and your risk is before you get in any trade, because hope is not a plan. Serious question. Since you were a market maker in the past life, how much of this volatility is actually created by market makers? Not a lot of this volatility is created by the market makers. They can't do that much. It's more just the overall trading cycles and everything else. The market makers aren't specifically triggering a lot of this volatility. A lot of this volatility is now due to just at this point, the negative gamma and the overall rotation and distribution patterns. You have a lot of selling in with some the bigger boys are in distribution mode. The smaller people, a lot of it's still being picked up by retail. I want to peek at ARC though. And not much going on happened today in ARC. Little rally. Well, I'm keeping an eye on that to see if we start getting squeeze play going. If you watch social media, you will believe that retail is simply here to be robbed by market makers. That's why most people don't know what they're talking about. Are there games that get played? Yes, but it's generally not by the market makers. Can markets get pushed around to key levels slightly? Yes, they can. But you're not getting this kind of volatility. You're not getting these kind of moves due to market makers. Okay? This is not just one person or one firm unless they're executing a huge order. It's not just one thing. You're not getting this kind of volatility. This is a bunch of participants. And again, we're in just a very volatile cycle with everything that's going on, and you have negative gamma, which amplifies every move. It's why I keep pointing it out. So you're going to get it up to the upside and to the downside, because negative gamma on hedging, especially when you get these super volatile moves, if I'm hedging a negative gamma position, I have to be buying into it. Then it reverses. I just bought. Now I have to start unwinding when I bought and sell back with the dip. Yeah, and social media doesn't know. It's like all their talk about with the ladder attacks and everything else. It's people who get caught in positions, don't know what they're doing, and just want somebody to blame. Is this a challenging trading environment? Yeah. But a lot of the traders that you see now started with the COVID crisis, and this is the market they're used to. They're not used to this. So it's the market makers. Here it was never the market makers. Here, it was always because it was always buy the bounce. And here it's just we're in high volatility. I mean, if you take a look at ATRs, let's take a look at your ATR. It's turning back up. Your average true range is still relatively high compared to look at the average true range. This is just a few of different ones that I watch, yeah, it's a little off the highs from these major volatility, but look where it is. Look at this. Look at this run up. Look at the average true ranges. All right, we'll just call it a median of around 40, 46. Now you take the median of this, you're at about 95. So you're pretty much double your average true range on the median basis from this range compared to this range. So we're just in a high volatility environment, which generally happens with down moves and at distribution tops. Okay. See, you again with the big sell-off, you had the major spike in ATRs. Then it calmed down with the rallies. You get the ATRs diminish, and you get much more stable price action. With this little sell-off, you got a little spike in the ATRs. This sell-off a couple times, you got the spike in the ATRs, but this really gets it going. So that's just the nature of the environment we're in. It's not due to market makers trying to screw you. Yes, and I think, as I said, there are still games to be played. For example, once you got down here in this area this afternoon, okay, right near this morning's lows. So, because this, all right, could this be pushed around by a big player to sell a bunch and then buy into the dip? Yeah, you sell a bunch of S&Ps, pushing it, breaking it below this, and then you just have your buy orders triggered to try to trigger stops to buy into. Yes, that can be a little short-term manipulation. Was this a short-term manipulation? No. This was natural unfolding price action. When stuff gets near its lows, and I spot this kind of stuff and watch the tape and watch there's a lot of bids getting hit, then a lot of just, all right, there's all this. Then there's resting orders to absorb it right below prior key lows. That can be very short term manipulation. Very. But when manipulation is a strong word, because you're just saying I'm selling into something to try to trigger it to go down, and then I have my short-term orders right below that. But this, you can't say this was all caused by even, unless there was a massive, and I didn't see anything on the tape where it's just a massive block of selling orders. There was some decent selling in here, but it wasn't just a mass selling order. Are you shorting the crude oil after API report? I don't have a bearish pattern yet, so no. When will the distribution and Fed speaking end? Who knows when the Fed speaking is going to end? Those will probably be constant for the next few years. The distribution will end when we start breaking. We'll be out of distribution pattern, in my view, once we start breaking below these February lows and get some flush out moves. Then it will turn into from distribution to sell the rallies. Remember, distribution takes a while. That's why tops are generally rounded and take a lot of time, and bottoms are generally more so V-shaped in the indices, or more so they rebound, retest, and then go. They're not generally rounded. Tops are much more in play than rounded bottoms. Do I think the SPY will be at 424 by Fed Day? I mean, 424 isn't much lower. I mean, Fed Day, we're still in May. Yeah, I could easily see that. I mean, my 62, yeah, I could easily see by Fed Day we'd be lower because longer term I'm bearish. So we could get that pop and then the rollover play easily by then. All right, there we go. Not seeing anything else. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please come back and leave some comments. And and like the videos. And by the way, I'm not ignoring some of these questions. Do I think? I don't like those questions. I mean, it was sort of fun when we were saying what gap filled first in ARC. But if I don't have, I mean, long term, I'm bearish. That's why I'm trying to answer your question. So I would tend to say the SP will be lower than where it is right now in May. Do I have any specific pattern right now to give me the exact price of 424? No, I do not. That's why I was actually looking to see where that 62 and a half was. So that's what you have to keep in mind. Longer term, we went over the real long term. My next and a bunch of other people's targets the other day around 3,500. You know, and can that change lower or slightly higher with me? Yeah, sure. But that's longer term. Do I know the exact timing it's going to get there? No, and it probably won't get there by mid-May. It'll probably take a lot longer than that to get there. But mid-May, if I had a great little pattern here, that but still it's all timing. Like a double could be complete in a day, a double could take a week, a double could take 2 weeks. That's where sometimes timing gets challenging to get to the full patterns. I just get sick of reading all the conspiracy theories about what they do. Again, people just want something to blame because a lot of people don't know how to trade. And a lot of people think, when I say, I get this stuff with, oh, you've been watching for a bottom. Yeah. And when there's setups, you execute it. Just because you have a potential doesn't mean, remember how many potential doubles have we seen that don't trigger? Just because there's a potential doesn't mean they have to trigger. And trading the probabilities are very different than trying to say, here, just I think. Well, you still have to trade something. You don't trade what you think. You trade a pattern. And when I say, look, I'm expecting a bounce, we're still cycle bottoms, RSI oversold. We have percent B buy signals, but as I said this morning, there was that little mini double before we got that bigger rally on. And then we had those double tops. Does it mean you don't trade the double tops? No, you trade the double tops. If you get a great bottoming pattern, you trade the great bottoming pattern. But enough people don't even have that. Enough people don't even have a strategy. They just do something because a bunch of other people are doing it. And then if it goes against them, they want to blame somebody. But that's not a long term reason for trading. That's not a long term pattern for success. So I try to teach something, at least learn something. I don't care if you trade the way I trade. I could care less. But what I try to instruct is consistency. Sometimes I'll add in some new things because there's a lot of longer term members here, and I do follow a lot of things that I haven't want to overwhelm people with. But overall, if you see, I mean, when you ask a question, you can see me. What is the first thing I do? I do harmonics. Why? Because I want to see where the key levels are. I look at the rotation zone. Why? Because I want to see that. You don't see me going up, throwing up brand new indicators every day. And I also do a lot of stuff like there's a lot of Elliott wave counts that we should be up for a little rally now in the S&P, but we have to wait for some confirmation. We still have that potential double. That's what I'm watching now. Could there be a trade before that double triggers to the long side? Yes. Could there trade to the downside? Yes. This is why we're in that tactical trading mode around a long-term bearish potentiality. So I'll leave it as that. I notice a lot of companies are doing stock split now. I don't think it will help the price to go up during this. I like this, the beer market. We should all be trading the beer market. I know you mean the bear market. Companies are going to do what companies do. There's still massive buyback programs. I think companies like Apple and Microsoft and some of these other companies doing massive buyback programs are going to get really hurt by it right now. It can prop stuff up temporarily, short term, but they're just going to flush that cash away longer term. The reason it's another thing that all this cheap money has done is, you can leverage debt, and a lot of companies have put it into stock buybacks the last few years. And eventually those are going to come back and bite the companies in the butt. I liked beer market better. And we'll leave it at that. I will talk to everybody tomorrow morning, 8 a.m. Tune in then, and I hope everyone has a great night. Bye for now.